Let's start off with copper. It's hit a new all-time high in today's session, and of course very close to that 10,000 level. Most investors expecting it to hit that level. PMI, strong numbers on a global level as well, and this is what's really propping up the copper price.
Yes, Eleni, that's exactly what I think is driving the price up at the moment. Is all of a sudden we're starting to see a bit more positive data coming through, particularly in the US. And I think the investors are now sort of turning their focus away from the Europe to the US and seeing this positive data and giving them hope, and therefore putting their money into things such as copper. Like you said, all-time highs, and I think everyone's focusing on that 10,000 number.
You know, what's also really interesting when you look at the copper price at this point in time, it's also got to do with the fact that not a lot of suppliers is going to come on board. Mines are also starting to become far more scarce, and we're also seeing grades being, you know, somewhat of lesser quality than before as well. So do you think that copper could hit that 10,000 level? And if it does, do you think we could see it sustain those kind of levels going forward?
I definitely think it can hit that level later in this year. I mean, if you're looking, if we have insufficient supply coming through, then it's definitely going to push the levels up. I think in the next couple of weeks, the markets will be quite volatile. And I think that's what we're seeing. Also, one of the things that might be driving copper is we see a lot of the indexes are actually doing reweightings, the commodity indexes. So I think that's one of the reasons why we saw such volatility in gold today. There's even talk of more money going into oil, and I think that's something that will sustain the markets such as oil and copper.
Let's touch on the gold price. Yesterday we saw it hit around $1,417 an ounce, and now we're seeing it $1,388 an ounce. So there's massive volatility coming through as well. And it's not really being reflected in the equity market. Perhaps currency markets also looking relatively benign over the last couple of days. So what's driving gold right now?
I mean, today was quite an interesting one. As you said, yesterday it was rather high, and everyone's expecting it to go to those new all-time highs again. I think today was a bit of a play on the dollar. Towards the end of last year, we saw that inverse correlation between the dollar and gold breakaway, with people wanting, because of the European problems, they're wanting gold, they're wanting dollars. I think today we saw that correlation come back a bit. So that's why gold started coming off. Everyone expected a lot of support at the 1400 level. Unfortunately, it hit those levels and it hit a lot of, which is a technical level, hit a lot of stop loss, and I think that's what caused it to come off more. And I do expect it to come off a bit more in the next coming weeks, particularly, as I mentioned, with this reweighting of indices. I think it will be a bit more volatile.
I think the question is now when it comes to gold, because it has been so volatile and we've seen massive moves on a daily basis, weekly basis as well. When is the right time to head in?
You know what? I think gold is one of those stories. It may be coming down now, maybe coming down for a week or so, but it is going to keep going up. People are still bullish gold. I think it's, like you said, it's a tricky one. You need to call when are you going to get in. At the moment, there's calls of 1385 as another level. They'd have to break that, go to 1335. But I think it's definitely going to keep going up. And I think that's the trend we're going to see throughout this year. People are definitely bullish. They're definitely looking for the 1500, 1600 level, but it's going to come gradually. We're going to come with these corrections like today. People are going to buy back in. The physical players particularly are going to get in at these levels and keep pushing that price up.
And of course, surely if we see more QE2 talk or extension of that will also pop up.
I mean, with the low interest rates where people are not getting returns there, the interest rates aren't expected to rise until end of this year, early next year. With inflation, people are still expecting inflation to come up, and I mean, gold is known for good old inflation hedge.
Simone, touching on another phenomenon, we've got floods in Australia propping up the coal price, and we have very bad weather in the northern hemisphere, which of course is keeping US oil inventories relatively low, and this is why we're seeing oil prices at around $95 a barrel. Are these kind of levels sustainable?
I think coal, I think, would be slightly different. I mean, these levels are particularly due to the Australian flood, so it is slightly inflated. Oil, on the other hand, slightly different. Yes, the weather is keeping it up. Yes, the inventories have been coming down for the last few weeks, but there is expectations that the inventory stocks are going to start rising. And if we go back to what the US economy is starting to look like, and hopes that China is going to be have this sustainable growth, then we definitely will expect oil to maintain these levels and go to that $100 barrel that everyone's waiting for. So I definitely
we're not too far away.
We're not too far away. That's the thing. So I definitely think it's sustainable and that we're going to get there.